Hello everyone. In previous lecture, we have discussed about share capital and other equity, and we have seen that how companies they record their share capital and what balances they show in other equity. Today, we will be discussing about non-current liabilities and current liabilities with the help of annual report of Dabur Limited. So here you can see in liability side, what company do record their non-current liabilities and current liabilities. And we have already seen that what is the difference between current liability and non-current liability in our previous lectures. So if you see first item which they have shown in non-current liability side is financial liability, right? So financial liability includes your borrowing. It includes other financial liability. Now what is borrowing? Let's suppose Dabur Limited, they have taken a loan from SBI Bank. Dabur Limited has taken a loan from SBI Bank, right? Now if Dabur is taking a loan from SBI Bank, and if the maturity period of that loan is greater than 1 year, then it will be shown in this borrowings, or you can say non-current liability side, right? Now is financial liability. Financial liability, we have already seen financial assets, right? So what is the meaning of financial asset? Financial asset means if company is investing in securities of other company, this is going to be financial asset, right? Now I am taking example of Dabur Limited and Reliance Limited. Right now, what Dabur Limited has done, they have issued their debentures to Reliance Limited. Right, Dabur Limited, they have issued debentures or bond to Reliance Limited. Debentures or bond. Right. If Dabur Limited is issuing debentures or bond to Reliance Limited or to public or to some other company, so what does it mean? Dabur is giving some certificate to the Reliance Limited, and on behalf of this certificate, what Reliance is doing, Reliance is giving money to Dabur Limited. So let's suppose they have issued circuit of 5,000 crore rupees to Reliance Limited, and Reliance Limited has given 5,000 crore rupees to Dabur Limited, right? So here indirectly what Dabur is doing, Dabur is borrowing loan money by issuing debenture. Debenture is a kind of loan, right? When you borrow loan from bank, we say it as rights. But when you borrow loan from companies by giving them some certificate or some security, so this is to be debenture. Right, so debenture is a tool, you can say, from which you can borrow loan public or other companies, right? So it's a kind of loan. So when company issues share, let's suppose Dabur is giving their shares to Reliance Limited, right? So here is giving ownership, right? If company Dabur is giving their equity shares to Reliance Limited, it means Reliance will be the owner. In this case, Reliance will not get ownership. Reliance will be treated as a lender when they issue their debenture or bonds, right? So here, if company has issued any debenture or bonds or any other kind of security, except share capital, right? Shares won't be shown in financial liability side; it will be shown in equity side, right? So here, if company has issued any security to their to other companies or to public, it will be shown in financial liability side, right? And if company has created any provision, right? Provision means company has created some reserves for future expenses, right? So this is going to provision or some contingent contingencies. Company has created some provisions, right? So it will be shown in current. Non-current liability, sorry. In current liability, company will show their financial liability. So generally, if companies issued some securities whose life or whose maturity is lesser than 1 year, then it will be shown in current liability side. So if company has borrowed money, company has borrowed money from bank, it will be shown in current liability side, right? Current liability side under the heading financial liability. Trade payables, creditors will be shown under the heading current liability, and it become a part of financial liability, right? Then other financial liabilities. Other financial liabilities could be company can issue, will be shown under the heading current liability. Non-current liability, sorry. In current liability, company will show their financial liability. So it will be shown in current non-current liability, sorry. In current liability, company will show their financial liability. So generally, if companies issued some securities whose life or whose maturity is lesser than 1 year, then it will be shown in current liability side. So if company has borrowed money, right? Company has borrowed money from bank, it will be shown in current liability side, right? Current liability side under financial liability. Trade payables, creditors will be shown under the heading current liability, and it become a part of financial liability, right? Then other financial liabilities. Other financial liabilities could be company can issue some securities where maturity period is lesser than 1 year. And other current liability is given. This is other financial liability and this is other current liability. So current liability can be of different types, right? Company has taken loan from bank, right? Overdraft. So it can be shown in other current liability side. Here, provisions we have already discussed. If company has created some short-term provisions, right? Let's suppose come to pay some salary to their employees, additional salary due to some uncertainties to their employees. So here, company will create provisions. Then you can see current tax liability, right? We will discuss about tax liability in coming session, but I will give you the some detail about current tax liability. Whatever profit companies earn, on that profit, what company will do? Company will pay tax. So this is what a current liability. So company has not paid the tax yet. This is going to be current tax liability, and that is the reason in liability side, right? Your other current liabilities can include outstanding salary if company has not paid salary to their employees, or it includes outstanding expenses. Let's suppose electricity is due, this expense is due, but company has not paid, right? So outstanding expenses will be shown in the current liability side. And the very important thing now I want to discuss with you, that the total of asset is going to be equal to the total of equity and liability. So here you can see the total of asset is how much? It is 7,504, right? Now we will see the total of equity and liability. It is also 7,504 rupees, right? If your equity and liability total matching with asset total, then your balance sheet is correct, right? So you have to take care of this thing. Total should match. Otherwise, your balance sheet will be treated as an incorrect balance sheet. Thank you.